Welcome. In this lecture, I want to explain what is a ratio. Well, let me get this straight. A ratio is nothing special. It's just a simple math concept, and a ratio is just a comparison. Now, in this lecture, I want to explain what is a ratio, how does it work, and why do we use financial ratios. A ratio is actually a comparison between two things. And we can actually use it in real life. For example, if we use this example here and we say in a class we have 60 people, of which 40 boys and 20 girls, if we want to strike a ratio or a relationship between boys to girls, we get the number of boys, which is 40, and divide it by the number of girls, which is 20, and that's when we get our ratio of 2. Now, what does this number mean? What is this number telling us, and why do we use it? Well, this number is telling us that we have twice as much boys as girls. And we can do also the opposite thing. We could divide the number of girls by the number of boys, and we will get 0.5. It means that we have half girls compared to boys. And the reason why we strike a relationship between boys and girls is just because we want to better understand the composition of the class. And that is why we use financial ratios. Financial ratios are actually comparison between items that we can either find on our income statement, or we can find on our balance sheet, or we can find on both of them. In other words, we can use financial ratios to measure the performance of any business, and that's why those are also called performance measurement. So we are going to assess the performance of any business by looking at their financial ratios. We have financial ratios almost for anything in finance. We have financial ratios to assess profitability. We have financial ratios to assess liquidity, of course leverage, and therefore solvency, and then efficiency, valuation, and so on and so forth. And that's what we are going to do in this course. We're going to see them all. And keep in mind that the reason why we use the financial ratios is just because we want to know how the business is doing from an overall standpoint. But you cannot know how the business is doing if you just look at the income statement or the balance sheet in an isolated way. You have to look them combined. And that's why we use the ratios.